Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.exchange. Last week, the Nifty was very volatile, and whatever the gains made, it was lost because of expiry date trade. So, expiry date trades, it's becoming more and more difficult nowadays. And that too, we have expiry almost every day, one or the other expiry. But looking at the global cues, they're really very good. And Dow was continuously up by about 13 trading sessions. And had they gone just another one trading session, they would have made history. But on 14th day, there was some profit booking. But then whatever lost on the 14th day equally was gained on 15th day. So the global cues continue to be good. So I always say after a bigger fall, there can be very big upside momentum. So that was seen in after the Lehman Brothers collapse. During Lehman Brothers collapse, Nifty fell 50%, but after that it shot up more than 100%. And then the same way after the coronavirus, during the coronavirus, Nifty fell 40%, but after the coronavirus, Nifty shot up more than 100%. And this time, the US inflation plus the Ukraine war, and because of all these things, Nifty fell. But this time, remember, Nifty did not fall 40% or 50%. So therefore, probably it may not shoot up 100%. But 40-50% shooting up is likely possible. Since we hit the low of 15,200 sometimes last June, from there, so right now we are around 20,000. So that's only about 30%. So maybe there is a possibility of another 20-30% over a period of next few months is very much possible. So therefore, our underlying current is bullish. Not only for the long term, look at the short term. Nifty came into correction in the month of December, in the middle of December last year. It corrected for about 3 months. So by the end of March, so bottom was made. So from first week of April, Nifty started moving higher. And April, May, June, July. So 4 months continuously Nifty moved higher. And I always say in the short term, when the trend sets in, usually the trend will last 10 to 12 weeks. But this time the trend is extending beyond 17th week. So that shows that the markets are very bullish. That's number one. Number two, even in a bull market, Nifty doesn't go straight up. It will come for a frequent profit booking. In fact, more profit booking will come only during the bull market because a lot of people who entered 6 months, 1 year before, they'll be sitting with a good profit. So anytime they can book the profit. But when the profit booking comes, how much it falls? So that matters. And for the first 3 months, intraday fall of about 80 to 100 point was very frequent. And then positional fall of about 250 to 300 point was very frequent. And then Nifty took support. But only last time, so Nifty fell nearly about 400 point positionally. At the same time, every time when Nifty broke 20-day simple moving average, so Nifty took the support and bounced back. So that was the case yesterday and day before yesterday also. I think both the days Nifty touched at the 20-day moving average and bounced back. And right now, GIFT Nifty indicates about a 70-80 point gap up. And we are opening around 19,800. The future is 19,800. Spot may be around 19,700. And Some people say they call it as a box theory. So it moves in boxes. So 18,000 to 18,500 is one box. Nifty was trading in that box violently up and down. But once 18,500 is broken, then they went to the next box, 18,500 to 19,000. Again, after trading for some time in that range, it moved on to the next box, 19,000 to 19,500. And after trading for some time, it moved from 19,500 to 20,000. Right now, the Nifty is trading in the box 19,500 to 20,000, but markets are trading very violently in this range. But once the 20,000 is crossed, it may be moved to the next box 20,000 to 20,500. So what they call this as a box theory. So I don't know, only in stock market people come out with lots and lots of theories. Right. So for the short term, definitely markets are likely to trade between 19,500 and 20,000. So you can become bearish once it breaks 19,500 on the downside and become more bullish when it crosses 20,000. However, market may go up to 20,000 once again, and then definitely there will be some profit booking and market may come. Then people will think, the 20,000 will be the double top, and then everybody will become bearish, and then the market will shoot up again to cross 20,000. So the markets are designed to reward only minority people, not the majority people. So sometimes it makes sense to behave opposite to the herd mentality. So in stock market, so especially if you are an option buyer, you should be doing that. So when the markets are at where everybody was fearful and you buy a call option, when everybody is greedy, you buy a put option. So that may make sense. So uh, again, we are coming to the first week of August. The usual economic data like manufacturing PMI data, services PMI data, US jobs data, and so many things will be coming. Monthly auto sales data. So after the results, so we have seen, auto pack is doing very well. The banking actually not really well. I think after the results, almost all the top banks, HDFC Bank, Kotak Bank, Axis Bank, uh, ICICI Bank, so all banks were not doing well after the results. So Autopac has made a decent run up. So monthly auto sales data will also be in focus. So economic data wise this one, and otherwise as I said, so it's again once again the world story. 19,500 to 20,000 is the short term range, and when I say short term range, maybe next 4 trading sessions up to the weekly expiry, and then medium term, the monthly expiry maybe 19,000 to 20,500. And but markets are so bullish, the people are ready to buy options, even far away. For September month, okay, which is about 2 months, 21,000 call option is trading above 50 rupees day before yesterday, because yesterday the markets are corrected, so prices came down to 40, 42 rupees. But still, people are expecting Nifty to scale up to 21,000. And you may remember, I just gave one strategy, buy 20,000 put option in July. Sell 20,000 put option in July, buy 20,000 put option in December. So it's a deep in the money put calendar. So that strategy has given a very good profit. And probably now, if you think that markets are likely to go to 21,000, may not be by August or September, at least by October or November. If you think that 21,000 is a target, so the same strategy you can try. You can sell 21,000 put in August and buy 21,000 put in December. Then by the end of August, if the markets are not going to nearer to 21,000, then maybe you have to square up the August put, then you have to sell December put of the same strike. And however, I am not a SEBI registered person, so this is just given for an education purpose, and consult your financial advisor before taking position. This strategy, the downside risk is there. So the downside, you may lose a maximum of about 3,000 to 4,000 rupees per month. Per month, it's not for the whole contract. And upside, the reward, the more it goes towards 21,000, the more will be your profit. So one of my friends did this strategy, the July 1. So he got almost 18,000 rupees profit. But whereas the capital deployed for this is only about 32,000. Put calendar, one advantage is that the margin is very, very low. So he almost got 50% return. So, put calendars make sense if the markets are moving violently higher. And anytime the profit booking may come. So, if it goes down, your loss is limited. So, that is one thing. So, otherwise, this time, once again, it's just like a last few months. So, 19,500 to 20,000 in the short term, 19,000 to 20,500 in the medium term, and 18,500 to 21,000 is that for the long term. Long term maybe 2 to 3 months. So with this, markets are likely to move, but markets are likely to move violently. So the last two trading sessions, FIIs were net sellers for 5,000 crore. So that seems to be a bit high, but since they've been pumping in money for the last 4 months relentlessly, so this is not a very big figure. But if they continue to sell, then it is time to be more cautious on the long side. So let us see what is going to happen this week. But I'm not expecting any big move because most of the corporate results are over. Now, how the market moves is based on global cues like crude prices, Indian rupee exchange rate, crude global markets, and so on. Plus the after digesting the results. So what is the decision of the long-term investors, whether they are buying or selling. So therefore, the movement may not be zigzag movement. The movement may be an orderly movement. So when an orderly movement is there, so option sellers make good amount of money. But I can tell you, now there was some news report that retail people maybe there may be some restriction that based on your net worth or based on your ITR only you can trade in Indian markets. So maybe I'll come out with a separate video, but I can tell you trading in US market is so lucrative compared to trading in Indian market. So anyway, not all people can do that. So maybe I'll come out with another video on that. So right now, since I'm going to attend some family function, so this is only a podcast. So from Tuesday, we will resume our video. So hope you enjoyed watching this video. Thank you for watching.